This is Eric Muadhi of themuadhi.com, going into the new week, November 17th, 2008. Let's take a look at what the charts are telling us in preparation for the new week. The market still, actually let me take a step back and say in 2008, those who participate in the market and are not adapting to the new conditions, to the new environment upon which the market is forcing all of us more and more to become shorter and shorter term traders. Gone are the days for now where you buy a stock and you wait 3, 4, 5 years, because the way things are looking, if you come into the market with that kind of thought process, if you buy a stock at $40 hoping you're gonna come, you're gonna be making some great gains in the coming years, by the time you actually come and look at the stock 5 years from now, the stock might have disappeared from the face of this earth. So you really need to take into consideration what the market is telling us. All of us have had to adjust the way we trade, and that's the message of the market. It's so loud you can't help it. You've been seeing the incredible price swings almost on a daily, on a weekly basis now, and it is also true that a species that cannot adapt to a changing environment will eventually become extinct. So if you don't adjust, then it's probably better for you to stay on the sidelines. If you don't have the tools or the skill sets to put you in a position to make money from the wild ride, you might also just stay on the sidelines until the time, the environment changes to where you can actually use whatever skills you use regularly to trade the market. The market is not looking like it wants to make a strong rebound anytime soon. Let's start with the S&P 500 index. Right off the bat, you will notice that this thick moving average here is the 13-day moving average. Right now we are stuck in this range, which means it's just gonna be, it's trading right now. We're trading on that range, and should we, which I'm leaning towards a break, even though I don't know, to the downside, it's gonna be a signal that the market is gonna be making lower lows in the last part of November and early part of December. So if this moving average, this 13-day moving average is consolidating, if it breaks down, then that means that that's a fresh sell signal for the market. As noted in my video late Thursday, early Friday, what we've done in the last couple of days is actually bust this support line on the RSI. We came back and back tested it, and now we are moving back down. Now it's really gonna be another down market if this RSI keeps trending to the oversold area in the 30 area or below. So that RSI, having back tested this support, is probably pointing towards lower lows for now, until the charts change, but that's what I see. And then most importantly is the MACD formation right now. This MACD formation is just, now we've set ourselves perfectly. Now the next thing you're gonna see is a crossover. Now in that crossover, let me try that again. The next thing you're gonna see is a crossover, and that's gonna be a fresh sell signal, which means the momentum to the downside is not going to last 1 or 2 days. It's going to be a really huge chunks of down days for a while, maybe 2-3 weeks. But that's what this is going to dictate, and more than likely everything seems to be pointing to a crossover sell confirmation on the main MACD, the 12, 26 and 9 setting. That's something we can watch. If we see that breakdown, then we know it's time that we can with some little bit of confidence short the market, take profits whenever you have them in front of you. They can always swing back and just take all that you've worked hard for. So if you have profits in the double-digit percentage gain in that range, make sure you lock onto your profits, or you use very tight trailing stops. Let's take a look at the Nikkei. Now, the reason why I love to watch this instrument is because they start trading before we do, so it gives me an idea to understand what's going on when their markets open, and I know how our charts look, even though they usually do trade a piggy bank on our trade here in the US, but more than likely in any case you just want confirmation that what your charts are telling you is accurate. Now, because we closed lower on Friday, they're definitely going to be trading lower beginning Monday, and the reason is, you see now the RSI has been, after making these 26-year lows here in late October, the Nikkei had a great move, almost 30% in a very short period, and we are backing off lately at resistance level on price channel highs right here. Now, what I'm suspecting might be next is we start giving back, we start trading lower after trying to move out of this top line price channel highs for a while. So we might start heading lower to retest these lows we made here, just above 7,000. Also, notice that the RSI has had several attempts to move above this line here and failed. Now, this is important because if we eventually come down and break this support as shown by the red line, what that is telling us and telling me is that this trend here that has been held intact by this psychological move above, that has stayed above the red line, is going to be broken. So if we break this support here, that means all this sentiment that took this instrument from 7,000 to 9,500 is going to be broken. And because this is a 26-year low, it's a significant low. Any trend break of that support line is a significant break, which more than likely might be bringing it back to this level around here, or in any case it's going to take the Nikkei way down. Also, take note of the fact that it's very close to the oversold bearish territory. So you get a break and an instantaneous move to the oversold bearish territory, which just calls for extremely lower prices. And this might be reflected in our markets and also worldwide markets. So keep an eye tomorrow, late US time, late in the evening US time, to see how the Nikkei is behaving, just to get a feel for what the chart in their market is going to look like. And if it's broken, then our markets are also going to be looking to break their charts and their supports, and then it's going to be another sell-off, fresh sell-off, another round of selling coming up in this week or early or late into the month. Now, this is a GE.